Welcome. I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So you had the bell ring there, so I do apologize for that loud gonging sound. Ding, 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 ding. But anyway, so markets closed for November 12th, 2021, and so we can take a quick look at where BTC and Ethereum are trading. So right there, and again right there. Why don't we begin this week's market analysis video by taking a look at what we did for the entire week. The NASDAQ was down slightly, even though it felt like a bigger drop at some point. So pretty much unchanged for the NASDAQ, down 0.6%. The Dow was down 0.63%. Let's just call that unchanged. That's nothing really. And the S&P 500 pretty much unchanged, down 0.31%. So let's say a no event week. At the end of the week, we are pretty much where we were last weekend. In other words, the bulls are still in control, which shouldn't be a big surprise because all of this have been all-time highs, all-time highs. All-time highs. Seems like we've been trading and making all-time highs for almost a century. Heck, maybe even 3 centuries. And you know, we have to be honest with each other. We've all thought that all of this was the beginning of the bear market. Come on, just admit it. I know I admit it. We thought all of these shallow pullbacks were the end. This is it. We are done. And we've all been anticipating the market to be trading somewhere here on its way to zero. Just doesn't seem to happen, right? Anyway, let's take a look at the technicals. Now, because not much has changed, I'm going to keep this as brief as possible so I can send you on your way. So we can see if we take the top side on the S&P 500 daily, and I think this gives us a good sense of what the market has done lately. We got this line connecting prior highs. And so we can say that we did clear this line and immediately went to new highs. We've bounced on this line before, late October, back to new highs, and we've held again here, which means that as long as we are above the blue line, we are almost locked in for the S&P 500 to record fresh all-time highs. Again, all dependent on whether we hold above the blue line. Otherwise, if there's going to be a drop in the market, we're going to have to break this RSI low line or the prior RSI lows line. Now, also putting things in perspective, even a pullback of any size is really not a big deal until we materially break below the 50-day moving average. I mean, we would have to break the 50-day moving average severely and then take out the 200-day moving average at some point if there's going to be a major bear market. Right now, those things are not on the table. I mean, we can pull back and have a normal, cozy bounce on the 50-day moving average. Normal, cozy bounce on the 50-day moving average. So that's why I say the bulls are still in control. We can get pullbacks and they will not necessarily break the market structure. If you take this line again, we can add another line just for the sake of color, which is the recent RSI lows line. So you can see the market in its wisdom came and bounced on this area right there, hence the bounce over the last 2 days on Thursday and Friday. Okay, if we're going to go down, we would have to break below these two lines. Now, on the NASDAQ daily, we have the exact same thing, which is we got the prior topside line and we got the recent RSI lows line on the daily for the NASDAQ. And again, the market found support exactly on the or around the intersection of these two lines, hence the bounce over the last 2 days. We would again need to break below this line before we can see a move down. Otherwise, we seem to be locked in for a fresh move to fresh, improved all-time highs. By the way, this is the Dow weekly, and it looks similar to some of the crypto charts like Bitcoin, for example, in that there is a line as such. This is the Dow weekly, and we can see that this week we came and tagged this line. We were also rejected as we tried to recapture the 69.1 threshold. So we can say maybe the Dow is starting to show some signs of a pullback. Maybe it's not the strongest pullback sign, but at least there is something there for those who are looking for a market to pull back. But we are still above the breakout level on a weekly standpoint for the Dow, which is 35,515.38. As long as we're above this number, which is the weekly closing high from August, as long as we're above this number, the market is still looking stable to bullish. Now, if we were to break and stay below this number, then definitely that would be a red flag and a reason to reevaluate the charts again for potential downside. So right now we're above this number, so we can say net we are still stable with the potential to move higher. Now I'm going to talk about and discuss the cryptos towards the end, but just want to show you, this is the Dow again weekly, and there's this line here. I want to show you how it's similar to BTC before I forget, because I might just forget. So BTC weekly, we have a similar line as such. And you can see we haven't yet cleared this line. Now, early in the week, we were above it, but you can see we are still hugging the line right here. So still hugging the line. Bitcoin is trying to decide whether it has enough in its storage tank to clear this line so we can advance higher. But we also know, because the line is well defined, and I'm going to draw that line again so we can see it, is if we turn negative around here on the RSI, then that would tell me that BTC is due for that strong pullback. If not potentially, we've seen a major high that might last weeks, months, years. Who knows? Now, momentum in the cryptos can only come here in the short term, that is, if we can clear this line and if Bitcoin can reclaim that RSI 69.1 threshold. Now remember, your charts are going to say RSI 70. This is the number. But this is close enough. Now, of course, I'm promoting myself when I use this number 69.1, but there's some reason why, because, for example, as we know, this number, as I've always discussed, is a variation of the 1.618, which is probably the main aspect of what can be termed as sacred geometry, golden mean, aka Fibonacci constant, aka pyramids, aka this number seems to be everywhere, including how our bodies are formed, plant formations, leaf distribution, galaxy formations. It's endless. So, if I take, for example, 50 and multiply this by 1.382, what do we get? Correct. We get 69.1. Let's move on. But before I do so, I don't confuse anybody, 0.382 plus 0.618 equals 1. And another way to say this is 38.2% plus 61.8% equals 100%. So I am personally 100% correct that this is the actual number. This is close enough, but oh well. I bet you are not expecting all this math. But then again, neither was I, just digressed. Okay, back to the charts. Yeah, where was I? The BTC backtest line is similar to that of the Dow backtest line. The Dow has already responded to this line. We shall see whether BTC will follow suit. Now, in saying all of this, let's not forget that even with the Dow showing that slight pullback on the weekly, the monthly for the Dow is still above 69.1. So, as long as it is above 69.1, we have to give the benefit of the Dow to the bulls. But should the Dow fail to hold this threshold and drop below 69.1, then there's a developing scenario that the next major move is significantly down. But hold it, right now things are still good. The Dow is above 69.1. S&P 500 has been above 69.1 since about March, February of this year, which is here, during the most recent breakout from early in the year. And as long as the S&P 500 is showing that threshold and staying above it, this is why the market is technically still very strong. And of course, the NASDAQ has been in the leadership position since this breakout here in April, May of last year, when the RSI jumped above 69.1. Oh, by the way, I'll have a video out here in a couple of days. I've already recorded the video where I was discussing AMD, NVDA, and SHOP based on the breakout alert that I sent out right here in April for all of those stocks. These have been some of the greatest moving leadership stocks over the last 1.5 years. AMD's breakout alert in April was right here on the charts, a nice entry from 50s, now in the 150s. NVIDIA, man, what a powerful instrument. The breakout alert was sent out to clients. Whoa, actually was here, 2020 breakout in April. And this one has moved from the 60s, now in the 300s. And of course, Shopify, that breakout alert was here. And it too has had a nice run. The video should be out in a couple of days discussing those breakout alerts from last year. Now back to the NASDAQ. NASDAQ's been above 69.1 since October. Yet another breakout, and the RSI has remained above 69.1 throughout the last year plus. So as long as the NASDAQ is above this number, bulls can relax because we are still in a very strong bull market. And of course, the semiconductor index has been on fire. Take a look at its RSI since July of last year, right there. This thing just broke out and hasn't looked back. RSI continues to be strong, above 69.1. Definitely leadership. Definitely. Take a look at the FXI with China-related ETF, which was breaking down. Here it was breaking down, but guess what? It has found support on the monthly, as was evidenced by this line here. It bounced nicely on the line here and has since recovered. That's the FXI. If you take a look at the emerging market, which looked like it was breaking down also, as we've been pointing out over the last couple of weeks, basically what it did was come back and test this breakout here, which began this move. That breakout on the monthly was tested, and as of right now is holding. hence the recovery over the last 2 months or so. And for example, if we take a look at the European market ETF, EFA, it looks good and needs to move back above 69.1 so it can continue adding upside pressure. Otherwise, not the worst looking chart in the world. It could pick up steam if the RSI can move above 69.1, right now slightly below that threshold. The Canadian market back above 69.1, and this is what we are getting over the last 2 months. Should continue being strong as long as it stays above that threshold. Even the weekly for the Canadian market is above 69.1, hence it continues to power to fresh all-time highs. Which, by the way, visually, doesn't this drop here in late 98, long-term capital drop, for those who know what I'm talking about, and then take a look at this drop in early 2020, followed by a move to all-time highs, just like we did here in 2000. We've done the same thing here. Seems very similar. Now, if that's the case, in terms of similarity, then the market is concealing that the next major move could be for a substantial bear market. If I remove all those boxes, you can see how they look similar. At least to me, they do. You get a shakeout here that goes nowhere. You get a shakeout here that goes nowhere. But ultimately, in the years to come, you come back and test the same lows. So we might come back to test either the monthly lows, as I've been stating, or the intraday lows of early 2020. Which, by the way, in relative terms, would mean the Dow coming back to test either 22,000 or test 18,000 for the Dow. Is it possible? Of course it is. Remember, if you can go up, it means you can come down. What goes up must come down at some point. Which brings me to the NIFTY, which, by the way, has been also very strong, and the reason can be explained simply by understanding the monthly RSI has been very strong ever since it moved above the 69.1 threshold. Very strong market on the monthly for the NIFTY. And even the weekly, after a pullback over the last 2 weeks or so, going back about a month, there was a pullback here. But we can see we're just about to reclaim fully the 69.1 threshold. We closed above it at the end of this past week. So if the RSI continues climbing above 69.1, then I would say there's a possibility, very high chance of recording fresh all-time highs. Otherwise, as we begin the new week, if we see RSI 69.1 rejection, if the RSI is rejected when trying to reclaim 69.1, that in itself can be a technical reason to take things lower and take them lower substantially. But net, we closed above 69.1. So let's give the benefit of the doubt to the bullish direction, which is higher. The Vanguard Total World Stock ETF is also above 69.1 and has been above 69.1 since the breakout that took place sometime in early January of 2021. So as a global market, as a global community, markets are above 69.1, hence they remain very strong. At some point, if the markets globally are going to go down, the RSI would have to drop below 69.1 on the monthly. Oh, and here in late 2019, we see what happens when you experience RSI 69.1 uniform activity rejection. You tend to invite these types of moves. And just like Bitcoin and the Dow, We can also see here that we have a line. We can draw a backtest line for the Vanguard Total World Stock ETF. So we can see early signs of potential resistance and a move down if this resistance is confirmed week to week as we go into the new week. And if we can clear this line, that can invite another push to fresh all-time highs. Again, similar to the Dow and the weekly chart for Bitcoin. Now for the month, so far we are seeing that gold is higher, about 4.5% higher for the month. But this is not necessarily a surprise because we've been tracking these long-term monthly charts and we were aware that this was a breakout in 2019. And so I've been talking about this for many weeks. This move here, if we take that area and draw a line as such, over the last, let's call it 9 months, in fact for the entire 2021 trading year, we've been coming back and finding support exactly on this line. So as long as this line is holding, we can say that gold is stable at the very worst. And another line that I've been drawing for potential guidance has been the simple RSI lows line as such, and it too was suggesting probability that this could be a support zone for gold. Now, that similar view can be seen if we take a look at the GDX, which tracks the miners. This one gives us a clear RSI lows line as such. And I've been pointing out that this could be where we found support. We've also gone back above RSI 50 RSI level with uniform action. So this bounce is only consistent with a simple long-term RSI support line. The same thing can be said when we take a look at the silver ETF SLV. I've been demonstrating that there is a good probability. Again, technical analysis is just about probability. There are no certainties. This line was coming in play. Market has decided to respond to that line by bouncing on the line and also by holding back above RSI 50 with uniform activity. This is what we call, or what I call, uniform activity, RSI 50 support and bounce. Those are monthly charts. Now, I'm going to go back to the GLD and take a look at its weekly chart. And so this is the weekly for GLD. This is 2 years of data. Come back to this breakpoint, which is significant because, as we can see, it's where we come off the highs of 2020. We take that line or that area and use my uniformity concept. And we can see that GLD has been responding to this line as per that concept, which I call uniformity. This is where we've been struggling. Every time we come to this area, we've been rejected with uniform action. And so again, we are back to test that line. Are we gonna show resistance yet again? If that's the case, then the next swing trade is down, or this time we might change things and clear this line to advance the current move higher in GLD or gold. I would say this is the line to watch. Resistance would be consistent with the recent area where GLD has been struggling. So we shall see what happens in the upcoming week or weeks. Which also, we can also use the silver ETF on its weekly RSI. And we can see a backtest line as such. And we can draw a topside resistance line. And you can see where the lines intersect is precisely where we closed for the week. Remember, these instruments or these charts have a tremendous magical memory. So this is where we are either going to get clearance and a reason to move higher, or we're going to get resistance and the technical reason for reversal lower week to week. Now, what is actually even more confusing is this week we've also seen a nice move higher in the dollar chart. This is the UUP, which is also higher for the week. And even for the dollar, this is 5 years weekly. 5 years weekly, I can draw a line connecting the break point here and touching this low here. So we end up with this area here. So this could also be a resistance area for the dollar, or the dollar could clear this line, pushing it higher and taking commodities lower. So honestly, this is a tough area for market participants to understand what is going on. I can also draw a line from here, something like that. And we can see at the highs here, we have uniform activity above the line back below it. And so we are back to test the same line. If I bring back the previous backtest line, we can see that this is a decision-making area for GLD. It would need to clear this line if the dollar would need to clear these two lines if it's to move higher. And as already pointed out, resistance here for the dollar would mean the dollar goes down and commodities move higher. And honestly, I don't know which way the market would pick, as we haven't seen new data, which is going to be, of course, in the new week or weeks ahead. So I would say indecision. But if I take a look at the XLE, I would lean to the dollar moving higher and commodities moving lower for the following reason. Again, this is the XLE monthly chart, all data monthly chart for the XLE. And I've been talking about this chart for like what seems like years. But anyway, in summary, this has been where this instrument, the XLE, has struggled. And this is also a way to understand what is happening or what could be happening for crude oil. I've been stating for many weeks and months that until we clear this red line, until we can clear it, I've been very suspicious of every move higher in this energy space, crude oil space, because it looks like this is where they struggle again. Unless they can clear and move above the red line, chances are we could eventually show another instance of resistance and we start moving lower in the energy names. Since they've had a nice run in the recent months off the lows of late 2020 and nice move, but looks like this move could be in need of a pullback. We shall see. Now, this is the reason why when natural gas was moving the last couple of weeks, very tempting to play the breakout, very tempting, but, and this is natural gas or UNG. The issue was this line right here. This is what happened in late 2008. We can't even see it because of this big, gigantic move. So what I might have to do is zoom in. But you see what I'm getting at is this top was being tested on the RSI. It failed here in 2018 and it had just come back to test it. I wasn't sure whether it was going to clear it. Looked like another trap, and it turned out to be yes. It actually was a well-designed trap. So this is a multiple year going back 2015 on the monthly. If you take this line here, which happens to be conveniently, or let's say knowingly, around the 61.8 threshold, on the monthly, UNG came back, tagged it, and since then, down. So combine that with the XLE, looks like the monthly chart is where we see problems, and the current hurdle challenge for energy names wanting to move higher. They would have to clear the monthly resistance levels before we can see a continued push higher in commodity related energy space instruments. Again, remember, as I stated earlier, markets have a tremendous memory. RSI 61.8 uniform activity rejection 2018. RSI uniform activity rejection. All of this happening at the RSI 61.8 level. Such a tremendous memory. Now let's take a look at those cryptos. And again, here's BTC and Ethereum real-time quote. And I'm gonna save us some time. There's a recent video that is on my YouTube channel, and I was talking about this resistance trap recently. This is the total crypto market ETF as furnished by tradingview.com. So this was a trap. We can see that developed perfectly. Check out that video. And just to save us time, I'm going to show you the recent 4-hourly lows line, which has turned into support. And again, short term, we found support exactly on this line right here. This is the 4-hourly for the total crypto market cap index. So if the cryptos are going to move lower, this line, the recent weekly lows line, would have to break down. Something similar is the Ethereum weekly chart, and we can see that, Ethereum 4-hourly chart for Ethereum, just on the short term, and we can see that this is where the RSI moved out of this, we can call it a wedge formation, what I call a swedge breakout, sentiment breakout. This was a wedge, broke out, nice price action. That happens to be around the RSI 50 on the 4-hourly. Draw a line from here, and you can get a good sense of where this instrument has been finding support on its way to all-time highs. So this line essentially would have to be broken down before Ethereum starts seeing a strong slide lower. That was up. So if there's going to be a move to all-time highs, this would have to improve. If there's going to be a bigger drop off the highs, this would have to break on the 4-hourly below the RSI 50 level area. By the way, for all of you who like to trade and swing trade, this RSI 50 bounces with uniform activity are good re-entry levels for any instrument, especially when the RSI on the monthly is above 69.1, as is the case for Ethereum, whose monthly RSI has been above 69.1 since late 2020. And I have to say, if you missed this breakout on Ethereum, come on now. And in conclusion, remember that BTC still holds above 69.1 also. And as long as BTC is above 69.1 on the monthly, give the benefit of the doubt to higher prices. If BTC rolls over back below 69.1, be on the lookout for a massive sell-off. On the daily, as I pointed out midweek, this daily breakout for Bitcoin has failed at about 66,000. So 66K failed breakout. That in itself is a red flag. So if Bitcoin is to move higher, it does need to successfully take back the 66K level. Otherwise, this divergence is starting to look bearish, and the red flag, the failure to break out above 66,000, remains a problem. Ultimately, it is this range here at about 58,000 that is the next line to watch. 58K. I would say if it breaks below this most recent base formation, if it breaks below that range, that would be the second red flag, and that would be a reason to get out of the cryptos in the here and now, ask questions later, because a second red flag, again, which is a break below the 58,000-ish area, a break below that level would mean a second red flag, and those who are bullish would have to endure some pain because of the two wrongs: failed breakout and a potential future failed breakdown. Would seal the case in the short term for the cryptos. Again, be on the lookout or check out my previous video from midweek where I discuss all these charts in detail, and potential downside price targets if 58K is breached to the downside. That concludes this week's market analysis video. US markets having closed. Here are the cryptos. And so it is. I am Eric with Mwathe.com, and I leave you as I found you, in the love and in the light of the one infinite creator. Go forth therefore rejoicing in the power and in the peace of the one creator, Adonai.